Welcome to another section of AE Accounting Tutorials. Today we are continuing our series on accounting for high purchases. But in this video, we will be taking another practice question on small and less valuable item. But this time we are using the stock on high method in determining the gross profit of the high purchase contract. Remember that in our previous video, we took a question where we used the provision for unrealized profit method in determining the gross profit of the high purchase transaction. Is that okay? But this time we are using the stock on high method. Before we take the question, let me use just a minute to explain the concept of the stock on high method. Is that okay? So with regards to the stock on high method, we all knew that in a high purchase contract, the items are sold in such a way that initial deposits are made at the beginning of the high purchase contract and the remaining amount are paid in installment basis. Because of this, at the end of the very year of the high purchase contract, some amount will still be with the high purchase debtors or the high purchases. Because of this, it will be very difficult for the high vendor to determine the true profits at the end of the first year, just because some of the sales amount are still with the high purchase debtors or the high purchases. Okay, and this stock on high method is saying that because of this, let's split the sales into credit sales and cash sales, okay, so that we determine how much of the stock that is still with our debtors as at the close of the first year of the transaction. We knew that in a high purchase contract, the item being sold out comes out in two different ways, okay, that is, we have the cash component and then the credit component. So we know that for total sales, okay, for total sales we have the credit sales component and then we have the cash sales component. That will give us the total sales. Okay, the initial deposit that is being made at the beginning of the contract represents the cash sales. Okay, then the installment that will be paid in later period represent the credit component. So at the end of the very first year of the high purchase contract, the stock on high method is saying that let's calculate stock on high to determine how much of these credit sales that are still with our high purchases or our high debtors, so that at the end of the period we can determine the true profits of the business. So that is basically the concept of the stock on high, and we have a formula that we use to determining the stock on high that is still with our debtors. Is that okay? So the formula for the stock on high method is, we have that is stock on high method, and the formula is HP. HP means the high purchase, so high purchase debtor over the HP, high purchase total sales. Then we multiply by the cost of the high purchase goods. Okay, very good. This is stock on high method, and we are multiplying by the cost of the high purchase goods just because stock is valued at cost. So we multiply by the cost of the high purchase goods. Okay, and we are calculating this based on the debtors balance at the end of the period. So at the end of the very first year, the amount that is still with our debtors, we base on that to determine the stock on high. Okay, so that is what we do. So let's go through the question together and try to see how we can prepare the trading profit and loss account and the statement of financial position for the high vendor. Is that okay? Yabra Enterprise started business on 1st January 2019, mainly to sell flat screen TV sets of a standard type LG 54 to teachers on high purchase terms. The total amount, including interest payable for each TV set, is 6,000 cedis. Customers are expected to pay an initial deposit of 1,200 cedis, followed by 24 monthly installments of 200 cedis each. Yabra Enterprise purchased his stock from Somovisions Electronics at a unit cost of 4,000 cedis. Price remained unchanged throughout 2019. The following trial balance was extracted from the books of Yabra Enterprise as at 31st December 2019. Capital 4,000 cedis. Remember, 3 zeros are up. Fixed assets 400, drawings 160 cedis, bank overdraft 384 cedis, creditors 1064, purchases 7,200, cash collected from customers 3,060, bank charges 16 cedis, wages and salaries 512 cedis, general operating expenses is 220 Ghana cedis. For the first year of operation, year ended 31st December 2019, 1,700 units were sold. It is the policy of Yabra Enterprise to take credit for profit, including interest, in proportion to the cash collected from customers. Fixed assets are depreciated at the rate of 10% on cost. Required, prepare the hire purchase trading account and profit and loss account for the year ended 31st December 2019 and a statement of financial position as at 31st December 2019 using the stock on hire method. All right, so this is the question, and we have two requirements. We are preparing the income statement and then the statement of financial position. Okay, but this time we are using the stock on hire in determining the gross profit. Is that okay? So let's begin with this question. So our first requirement is the hire purchase trading profit and loss account. For the year ended 31st December 2019. All right, so I'll bring my currency sign, cedis. Okay, so we knew that to begin with this question, okay, that is the income statement, that is the first requirement. We start with our sales. Okay, but before we start, there are certain workings we need to do from this question before we can proceed with our requirements. Okay, because the sales amount is not given directly from the question, but there are informations in this question for us to determine our total sales. Is that okay? So to determine the sales amount, we have the units sold, okay, and then we have the per unit cost. Okay, so we sold 1,700, so this becomes our workings. So we have units sold of 1,700, okay, at 6,000 cedis. So to get the sales amount, we multiply the unit by the cost price per unit. That gives us 10,200,000 cedis. Okay, that is the total sales. But remember that we are using the stock on hire method in preparing these two accounts. And stock on hire method is saying that we have to split the sales into two. That is the cash sales and the credit sales. The credit sales will be based on the components of the stock that is still on high, so that the gross profit you ascertain will be the true gross profit of the business. So this becomes the total. So but let's say that we have 3 zeros up. Okay, so with the cedis we have 3 zeros up, so that I can clean this zero. So we have 10,200. Remember, there are 3 zeros up. So this is the total sales. So to determine the cash sales has been given directly from the question. That is cash collected from customers. That is 3,060. Okay, so we have to determine the credit component. So we take out the cash component, that is 3,060. That is cash collected from debtors. Okay, so when we take this out, we arrive at 7,140. So this represents the credit component. Okay, that is the debtors balance at the close of the first year. Is that okay? So first of all, these sales will be split into two. We have the cash sales being cash collected from debtors of an amount of 3,060. 3 zeros are up. Okay, so with the credit component, we base on the stock on high to determine the credit component. Okay, so we have stock on high, and we have a formula to determining that. That is, we have the debtors amount of 7,140 divided by the total sales of 10,200. Then we multiply by the cost of the high purchase goods. Now, the cost of the high purchase goods is not given directly from the question, okay, but we can determine it from this question. So to determine the cost of the high purchase goods, okay, we have the units sold of 1,700 units. Then we multiply by the per unit cost, that is 4,000, and this will give us 6,800,000. But because 3 zeros are up, we have 6,800 as the cost of the goods sold. That the cost of the high purchase goods sold. So we represent here by 6,800. So when you punch this on your calculator, it will give you 4,760. So we add these two, and it will give us 7,820. So this becomes the total sales that we will be taking out the total cost of sales to determine our gross profit. Is that okay? So now we continue with the cost of sales. So we are lessening the cost of sales, and first of all, from this question there is no opening inventory or opening stock. So we continue with our purchases amount, okay? And the purchases amount from the question is 7,200. 7,200, and there are no adjustments on purchases from this question. So we quickly look at our closing inventory, okay? So to determining the closing inventory from this question, first of all, we need to know how much of the unit we bought. Then we subtract the units sold. So the purchases amount is 7,200,000. This is the purchases we made at a unit cost of 4,000. So this determining the unit purchased, okay, and then we sold 1,700 units. So the closing unit will be 100. Is that okay? 100 units. Then we multiply this by the per unit cost of 4,000, okay, and this will give us 400,000 as the closing stock. Okay, so we take out our closing inventory. So closing inventory of 400 because of the 3 zeros. Is that okay? So when we take this out, we arrive at 6,800. So this becomes the cost of sales. Then we take this cost of sales from the total sales to arrive at 1,020 as the gross profit. So this becomes the pure gross profit because we are using the stock on high method. Is that okay? So after arriving at our gross profit, then we take out the operating expenses to ascertain the net profit. So we less operating expenses. Okay. With the operating expenses from the question, we have bank charges, and the bank charges of an amount of 16. We have wages and salaries, and from the question, wages and salaries is an amount of 520, and we have general expenses. of an amount of 220. And remember that from the question, fixed assets are depreciated at the rate of 10% on cost. Okay, so we depreciate fixed assets by 10%. So depreciation, that is fixed asset that is 10% on the cost being 400. So the depreciable value or the depreciation charge for the year is 40. So the total operating expenses become 788. We take it from the gross profit to arrive at 232 as the net profit of Yabre Enterprise. Is that okay? Very good. So after determining our net profit, then we have to look at the next requirement, that is the statement of financial position. Now we are done with the high purchase trading profit and loss account. But remember that we are making this entry in the book of Yabre Enterprise. So because of the board, I didn't write the name, so you have to write that on top of your work. It is very necessary. Yabre Enterprise as the name of the business. So I'm going to clean this place so that we look at the statement of financial position as well. So let's look at the second requirement, that is statement of financial position. Okay, so we begin with the fixed assets. So the fixed assets, that is the non-current assets. Okay, and from the question, it is an amount of 400. That is 400. Okay, and we depreciate these fixed assets at 10%. So the depreciation charge because we don't have any accumulated depreciation, we have only the annual depreciation charge for the period. So we are taking the depreciation charge of an amount of 40. Then the carrying amount becomes 360 as the carrying amount. Or the net book value. Is that okay? Then we consider the current assets. So we have the current asset. We have the stock. That is the closing inventory. And we've determined that already, the closing inventory of 400 cedis. And then we have the debtors amount. Remember, the debtors amount is not given directly from the question, but remember we are using the stock on high method, and we've determined how much of the stock that is still with our debtors. That is 4,760. So we have 4,760. So we add these two and we arrive at 5,160. So we take out our current liabilities. With the current liabilities from the question. So from the question we have bank overdraft and creditors. So we have creditors, we have bank overdraft. Bank overdraft. So these are the two current liabilities, and the creditors amount is 1,064 and the bank overdraft is 384. So we add these two and this will give us 1,448. Is that okay? Then we are taking the current liability from the current asset. So when we take this out, we arrive at an amount of 3,712. That is when we subtract this from this. Is that okay? Then we add this to the total non-current assets, and that is 4,072 as the net asset or the total net assets, okay, of the business. Then we look at the finance by. how the high vendor financed this net asset. Is that okay? So we begin with the capital. The capital from the question is an amount of 4,000. 4,000, okay? Capital is 4,000 cedis. Remember, 3 zeros are up, okay? 4,000. Then we add our net profit. That is the net profit that we've ascertained from our trading profit and loss account. That is 232, okay? 232 as the net profit. Then we subtract our drawings, or we less our drawings. The drawings is 160, and this will give us 4,072 as the capital employed. Okay, so you can see that the statement of financial position has balanced. Okay, so basically this is how we use the stock on high method in preparing the two final accounts of the high vendor. Okay, so in our next video we'll be looking at the concept of repossession. Okay, and we will be using both methods to solve a question to enhance our understanding. If you are new to this channel, I will encourage you to subscribe to this channel, turn on your notification bell so that any moment I upload any new video, you will get notified on your devices. We have so many things to learn together. Subsequently, we will be looking at so many accounting standard questions. So just subscribe and let's keep moving. Okay, until we meet for our next video, I think it is bye for now.